Well, right now we're looking at a hotter than expected PPI going along with the CPI. Producer price indexes for final demand rose 0.3 on the month after a negative 0.2 drop in December. In the energy, the ex-food and energy rises 0.5% after a down 1%. Ex-food, energy, and trade up 0.6. So we see some very strong strength in the final demand numbers on a headline basis. On a core basis, even worse. Final demand, final demand for core was up 0.5%. On a year-over-year basis, final demand up 0.9. That is a drop of 0.1. Base effects in effect there. The core 2% and ex-food, energy, and trade 2.6%. That one rose some. Housing starts are also out, down 14.8% in the month of January. Of course, bad weather probably contributing to that. Housing starts at a 1,331,000 annual rate. Building permits down 1.5%. So it definitely looks like builders pulled back, and that may be weather related.
Mike, just quickly here, I'm curious about whether the revisions change the picture at all, or whether this is a solidly inflationary picture, especially with the components that feed into PCE.
Well, you're putting your finger on one of the problems here. It looks like an increase, the kind of increase that we should worry about a bit. 2.2% increase in the hospital outpatient care area, which does feed into PCE. Now, one of the issues is in January, you tend to get these kinds of increases. The seasonal adjustment factors are supposed to take that into consideration. So not clear exactly how this is going to end up affecting PCE, but it should push it a little bit higher. The other thing that people have been watching for is securities brokerage and dealers. They had been making more money raising prices as the market continued to go up. That was up 0.7 during the month, which is down from a 2% rise the month before. So not as much of an impact, but it did have an impact on this overall. Index for goods down 0.2% in January, whereas the index for services was up 0.6, and that's the most since last July.
Mike, do you think this is going to be more troublesome for the Fed and for the market to digest? It was easier to move through and look through the CPI on Wednesday because it didn't have a material impact, as it were, on PCE. But here we are. We will have bleed through from this higher 0.3%. The estimate was for 0.1%. That's a significant miss in terms of the estimate. Is this one going to be harder to push away for the bond market?
Depends on how the bond market is thinking about it, and if they're worried about what the Fed is going to do. Of course, we've been cautioning people not to pay a whole lot of attention right now because they're not going to move in March, and so we have a lot of data to come, but it may show a little bit of a rebound in prices. January can be difficult because of the seasonal adjustment factors, so we'll have to see what February turns out to be, but obviously after a long string of declines in the producer price index, this is not particularly good news.